She's pushes off 6 and her balcony kicks. She got lips like a sofa and she's drawing down a soda. If the devil was a girl, and she wore yellow tea.
Hello friends, and welcome to Looking at the Markets with David Modell. Today I'm going to talk about trailing stop-loss orders. This is more of an intermediate video with stop-loss orders, so I'm not going to talk about what a stop-loss order is, but I have other videos on that. If you want to check those out, you're welcome to enjoy my more basic introductory videos on stop-loss orders. But this is trailing stop-loss orders. Okay, so with a normal stop-loss order, you set your sell price somewhere below where you bought the stock. It might be a percentage below where you bought it, or it might be a dollar amount below where you bought it. Now, if you're shorting stocks, then everything is the opposite. You would set your stop loss above where you shorted it. Okay, so, but with regular stop loss orders, this is a pretty good way to limit your risk, but it doesn't protect your gains if the stock goes up a lot. And let me show you what I mean. I drew this chart here as best as I could. Okay, so in this example, you could have sold for a profit, but instead you got stopped out for a loss. So this is one of the more frustrating aspects of normal stop losses, right? So let's say you bought the stock at this price and you put your stop loss here. Okay, and the stock goes sideways, and then it goes up and up and up, and then you know what happens a lot of the time, right? It starts to go down and down and down, and then you get stopped out, and it's below where you bought it, so you get stopped out for a loss, when if you had just sold it somewhere up here, you could have had a profit. All right, so that's a regular stop loss, and it could be very frustrating because of that. It doesn't protect your gains, really. It just prevents losses or extreme losses. So as you can see, regular stop loss orders are static, meaning they don't move or adapt if the stock price goes up a lot. That's why a lot of traders prefer trailing stop loss orders, which trail or move up with the stock price when the stock price goes up. So for example, if the stock goes up $1, the trailing stop loss gets dragged up $1 as well. It moves up with it when the stock moves up. So here's our example again, okay? So you bought it here, you bought the stock here, and you put your initial or first stop loss here, but you told your broker you wanted it to be a trailing stop loss, all right? And so it's going to, if the stock moves up, this dotted line will move up along with it, okay? So the stock goes up and up and up to here, and the dotted line goes up and up with it. It still stays below the current price as long as the stock is going up, but it kind of, you can think of it this way, as long as the stock goes up, it drags the stop loss, the trailing stop loss, up with it. All right. Now when the stock stops going up and starts to go sideways and then down, the dotted line, the trailing stop loss, it doesn't go down with it. It just stays there. And so you get stopped out here for a profit, okay, because it's higher than where you bought it. That's a lot better than before when you got stopped out down here for a loss. As long as the stock keeps moving up, the trailing stop loss moves up. Your profits can get bigger and bigger this way. Now, if the stock goes sideways or down, the trailing stop loss doesn't go down. It just doesn't move. All right, so this whole time, you bought it here, you set your trailing stop loss here, right? And so it's going sideways, stop loss doesn't move. Goes down, stop loss still doesn't move. So a trailing stop loss never goes down. It only moves up when the stock goes up. All right? And so if this happened, then the stop loss would have just stayed there and you would have gotten stopped out there. That's the worst that can happen. Although stop losses are not perfect, okay? For example, if there's an overnight really big gap down, you can, and you place a market order when you get stopped out, then you could get filled below that line. So be aware of that. It has the same problems as stop losses generally do, which is that you're not necessarily going to get your order filled exactly where you placed your stop loss. All right, so these are not perfect mechanisms for hedging risk. But so the trailing stop loss never goes below where you first set it in the beginning. All right, if you set your trailing stop loss here, initially it'll never go below that. And sometimes it will go up a lot before you finally get stopped out. Your trailing stop loss won't get triggered until the stock starts to go down and then hits that stop loss price. So again, it can go up quite a bit. If the stock just kept going up, then that dotted line would just keep going up and up. And it wouldn't stay put until the stock started to go down. All right, but it can go up quite a bit before it starts to go down and you get stopped out finally. All right. So, in my opinion, this is a good way to limit your risk, but also protect some of your profits. And just like with a normal stop loss, you can set a trailing stop loss either a certain percentage amount below the current stock price or a certain dollar amount below the current stock price. And if you're using Forex, it could be pips, whatever it is. Either way, the trailing stop loss will get dragged up whenever the stock price moves up. And if you're already using regular stop losses, you might consider trying a trailing stop loss and see if you like it better. It works a little bit different with each broker, so you can check with your broker for details on how to enter a trailing stop loss order. All right, so that's the basics on trailing stops. Hope you enjoyed this video, and you might want to try it. It's up to you. All right, so my name is David Modell, and I hope you like this video. If you learned something, then please give this video a thumbs up on YouTube and leave comments. And please subscribe to my YouTube channel if you haven't done that already. If you already did, awesome. Thank you so much. If you haven't, then by all means, hit that subscribe button and hit the bell on YouTube to get those notifications so you'll know whenever I put out a new video. And if you want some more help with indicators or putting together a trading or investing plan, because you really need to have one, then you can email me anytime. My email address is davidmodell@gmail.com. Thank you so much. I really appreciate it, and I'll talk to you again soon.
She's pushing 5'6", and her soccer knee kicks.